Whilst we've had all this geopolitical risk in these areas, very sensitive to oil production, actual oil output has yet to remain affected.
Right.
It's still fine. With respect to Iraq, all of the Iraqi output comes from the south of Iraq, from Basra. That area is entirely unaffected so far. And whilst these airstrikes have happened in the north of Iraq, close to the Kurdish oil fields, much of the Kurdish output is not entirely available to international markets.
Okay.
The pipeline taking this crude out through Turkey was destroyed in early March. And the few cargoes that have come out from these Kurdish fields have remained largely unsold in international markets.
Okay.
So there's no supply disruption really to speak of. What is interesting is the long-term supply growth that's been affected. And if we look at the forward curve of oil, you see near-term prices have, as you said, remained largely unaffected, come off slightly. But right out towards the back end of the curve, we've seen about $10 put onto the price of oil as people have now expressed caution about and concern about how quickly Iraqi output could rise and make up this extra
Okay,
supply.
so we've got that. I mean, they have huge reserves there, but perhaps not be able to get it out of the ground and into the markets, right? But at the same time, we've got the world's #1 economy recovering at a pretty decent clip, and that tends to support energy prices. And going back to geopolitics, I would have thought that maybe the Russia-Ukraine situation would have been a much bigger story for oil, because it looks pretty dangerous what's happening there.
Yes, on the surface you'd think that, and if we rewind back to the inception of the Russian-Ukrainian crisis, and we saw the bid in oil coming from that, there was original concern that output through the Black Sea and Caspian might be disrupted. The energy market that is most affected by those tensions would be natural gas. There's very little oil that actually goes through Russia, through Ukraine, into Europe. And that's a channel, that sort of runs in parallel, and that can have knock-on effects into the oil market in Europe as natural gas supplies may or may not be affected, and fuel substitution channels may or may not be affected.
Mark, let's shift our attention to the metals. Gold is at around 1,300, 1,309 right now. Why isn't it going higher with these geopolitical tensions? Because I'm reading the notes, you are actually pretty bearish with the prices and think it's going to go down.
We do.
And also talk about why you like palladium at the moment.
Well, gold, firstly, has been a dreadful safe haven of late. In fact, I think over the last 4 months or so, right throughout this spectrum of geopolitical risk, the range of gold has been less than $100, and it attracts an enormous amount of attention, frankly, because of what it did last year when it had its 30% down move. The factor that's still largely shaping the movement in gold is what's happening on these ETF flows. That's what drove prices lower last year, as we had this enormous liquidation happening. And this year we haven't seen any inflows. Many people thought we'd see a bounce and physical buying would come in at these cheap levels. We haven't seen that, so that's been a very negative factor from the sentiment side of gold. And of late we've actually seen redemptions slowly bleeding away on these ETFs. So it's very difficult for investors, to want to come into the gold market, especially within the broader context of the macroeconomic outlook and a rising rate framework and so on. So it's not behaving as people on the surface would expect it to. It's understandable in a way. It's done a lot recently, and I think it's just going to stay at these levels and drift lower.